Good evening, everyone. Welcome to the second series of SEC reporting analytics. I'm going to be going into some uh, actual live queries today, and kind of exciting. We have now published the last 6 months of information available and made those available into our aggregated data sets. So I'm just quickly open up my dashboard. For those of you that have watched the first installment, kind of give you a little bit of background of who I am and how the company formed. And the goal effectively today is to actually start getting into querying the data. Now, as you know, for those of you that have actually visited our website, www.secreportinganalytics.com, you might have browsed and found the Snowflake link to your free trial account. If you have, that's great. I'm going to be using Power BI today. We talked about a little bit that Snowflake has their own native dashboard. If you're comfortable with that, feel free to use that. I feel more comfortable with Power BI. I'm a Microsoft guy, so but I do have a direct connection to the Snowflake data sets. So that's awesome because now I can simply refresh my Power BI template and it will be able to pull down the latest information. So I would like to get started by actually just showing you the template here that we're looking at is our primary dashboard that we've generated against our data set. And so give you a little bit of background. The data itself currently, we are linked to our main direct query through Snowflake, and also stock price information that we have also available on Snowflake. And so my goal today is to actually merge my fundamental fact data set to stock price history so that I can do some really cool analysis and try to understand which companies are performing well from a book perspective, book value perspective being an accounting term in which based on our income and our balance sheet, our assets, our liabilities, we have a certain value to our company. And that value is what I like to compare to stock price value, which is the value that a publicly traded company is trading on the open market. And that variance between the book value and the stock price is something that I consider to be very fundamental in my analysis and my understanding of opportunities for investment. So with that said, I just wanted to quickly show you the data model. It's not very complex, two tables. Both are direct query connected to our Snowflake data marketplace listing. So let me get into the actual dashboard here and kind of give you a quick summary of what we're looking at. So on the top left here, you'll see our industries. So we can see construction, finance, manufacturing, mining, retail trade, services, transportation, communication, and wholesale trade. So I can actually select any one of these industries and it will filter my result set to show me only companies that are operating in that industry. So I find that to be very powerful when I'm going to look into a very specific industry or vertical to be able to compare the companies just operating within that industry and look at some of the key financial ratios that I consider to be extremely important to understanding the financial health of the company. I also provided some quick filters here for us. Like I said, we mentioned that the stock price is something we had merged our financial data set with. So I actually provided a simple filter to allow me to only scrutinize those companies within a certain band of which I'm willing to pay for a share. So, that number could be anywhere from 10 cents to $110 or even more. Also the other filter that you'll see here on the left-hand side is market to book value. Market to book value, again, is the value that I had mentioned earlier, comparing the market price to the book value. And the way we calculate the book value is, again, a financial calculation that we won't be getting into today, but certainly that is something you should look up online. A quick Google search of market to book value will give you a pretty good definition of the calculation that's behind that if you're interested. But that's, again, the summary is a comparison between the market price, the stock price, and the book value per share. So that's an item that I'd like to filter on, potentially to scrutinize and filter down my data set to only look at or scrutinize certain companies that meet my threshold of investment criteria. The third filter you'll see on the bottom left here is price to earnings ratio. That is a ratio that is effectively comparing the price per share, again, that market price of the stock, to the earnings per share, earnings being the net earnings of the company, the actual profitability of the company. So bottom line, after all said and done, a company needs to not only make revenue, but also pay all of their expenses. That includes cost of goods sold, that includes a lot of operating expenses, and ultimately they're left with profitability for the shareholder. And that profit actually per share depends on how many shares that company may have open on the market. And so that is a value that our aggregation and calculation assumes and calculates for us. And so we are able to look at the price per share and compare it to the actual profit per share and look at a ratio and compare that amongst the peers within that industry to see, again, who's looking as they're overvalued in terms of having a higher price to earnings ratio. That is, the market price per share is a lot higher than the earnings per share, and those that have a lower price to earnings ratio, which is in fact have a low stock price compared to their earnings per share. So there's opportunity there to find stocks that have a low PE ratio compared to their peers and invest in those companies because you would consider the market may not have yet reacted or understands the variance. Not everybody has access to this level of information to be able to scrutinize and analyze multiple stocks simultaneously. So with that said, today I wanted to quickly just give you a background of the filters that we have. So what I'm doing here when I'm comparing my market price, this actually, what we're looking at here right now is Power BI. And what you'll find is my market price, I'm using the average market price for this stock. And this stock, in fact, the close for the date within the stock price history, because I have multiple years and days, this is a daily stock price history. So I want to average all of that out across the entire 2021 period. So therefore, my metric that you're seeing here for market price in both of these graphs, the matrix up top as well as the graph below, is using an average market price across all of 2021.